right, so now we're gonna look forward. Moving forward, so the government is saying they're gonna retain all the funds. So I guess there's three ways they can do this, right? They can raise taxes and pay for it that way. They can print money, which is going to cause inflation, or they can have the banks pay for it, right? Somehow make the banks, right? Correct me if I'm wrong here. They can have the banks kind of front the bill, and then the banks are just going to pass that on in fees and other things to the consumer because they're not going to pay it themselves. Why would they do that? They want a business. So, is there any way that we can get ourselves out of this without like the middle class, regular people, Main Street just being absolutely hosed? I don't see a way that the government can just do this. Also, this seems very uncapitalistic, right? If the capitalism is like, let them fail. It's capitalism, right?
I'm not going to argue with that. We've privatized in a system like this. We privatize profits and socialize losses.
Oh, I'm so glad you said that because I have that written down in all caps. Now, it's fine to do. I'm not going to say it's fine to do that. I don't think it's fine to do that. But I don't ever want to hear a politician or anyone saying this is a capitalist society because it's not. I'm going to say it's bullshit. I'm going to say it's straight up bullshit. Because what happens now? Because you can't let the banks fail because that's going to cause a domino effect. It could. You don't want that. But this plan B doesn't seem much better because, as you kind of talked about earlier, the rich people are going to walk with the back with all the money, whether that's they can or can't, lawyers, we're not lawyers. But Main Street's going to get hosed one way or the other.
I'm not sure Main Street gets hosed. In some ways, Main Street doesn't get hosed because let's go back to that example of a decent sized business person who wants to be able to know that whatever money they're putting in the bank will still be there when it comes time to pay their bills and pay their employees and service their debts and buy goods and services that they need to turn into something else.
But it will be worth as much.
Well, here's the thing. What we're talking about with the FDIC here is, again, they did this on the fly, so we don't really know how this is going to play out. My gut is basically the Treasury sort of prints the money to cover these debts now, and that is somewhat inflationary. That's why, that has its own issues, and that sort of was considered by the markets today to be a liquidity injection at some level. Over time, if this is going to be the new insurance regime, the banks are going to have to pony up more money in insurance payments, right? I mean, if you're a poor, if you're a good driver with no accidents, you pay less in insurance.
Right.
If you're a crappy driver, you have to pay more. And if you go, and if you trade in a Subaru and for a Mercedes, your insurance premium is going to go up because what you're insuring is a much bigger number.
But aren't the banks going to pass that on to the consumer and the businesses that they bank with?
Yes, it's going to be more friction. So here's the trade-off. Now, that's not necessarily a bad trade.
Okay.
The trade is, am I willing to receive a little less in interest payments from the bank in exchange for a safer and sounder banking system? I think that's a reasonable question to ask. And the details are in the mechanics. I think that in and of itself is not at all problematic. It's not at all socialist, et cetera. The problem is if we just sort of say, okay, we're just going to keep willy-nilly, pay. We're going to subsidize depositors whether or not we're properly insured for it, and then just print the money to pay them off and make this a permanent thing. That's problematic. So the first thing I laid out, that's a choice, right? And that we all have choices like that. Do you want to take collision on your car? Some people do, some people don't. If you got a car that's kind of a piece of crap, you don't want to pay collision insurance. If you got and I've been in that situation where I've just taken the collision off because I was driving around an old car. So if we can do that as a society, as an economy, and make those choices in a rational way, then I don't have a real problem with that, because that's insurance is a risk transfer mechanism, and that's okay. Insurance markets work because risks get transferred through some, and the insurance company is the transferor of the risk. The problem is if we just sort of say, forget the insurance, forget any concept of insurance and premiums, and we're just going to keep the premiums the same. Or we're just going to basically say, you know what, we don't really care what banks do, and let them do all these crazy things, and the depositors will be made whole no matter what. That goes back to the privatizing profits, socializing losses, because it incentivizes bankers to take risks with depositor money that may not be at all appropriate.
Right.
The other problem we get into is people clamor for deregulation when times are good, because it's seen as this impediment to the profits that can be out there that we can make. But then people clamor for more regulation when something like this happens. When sort of and it's sort of inevitable that as you deregulate, you will find someone will find the holes in the regulation.
I think that makes sense.
The problem is in many cases, it's the same people who clamored for the deregulation who then clamor for either support or re-regulation, and that infuriates me.
Well, in a perfect world, I think that would make sense, right? The rules, it shifts like a tide, right? Cyclical. We mentioned about cycles earlier. When things are good, peel off some of the red tape. Everyone's playing by the rules. No one's cheating. Once someone cheats, you put the rules back in there. And then once everyone kind of settles down, you start to alleviate the rules, and then it goes back and forth. To me, that makes sense. But the same people who are alleviating the rules are the ones who are calling them back. I understand why it's infuriating. It's like they're playing. It's like, are they playing both sides? Is that kind of what it's like?
Well, yeah. I mean, I gave you the example earlier, again, about the published report about the guy, lobbying to not have SBV be a significant, a systemically important financial institution.
Yeah, they cited the low risk profile of their activity and business models, to which, where? Looks like they got that one wrong.
No kidding. And so that's exactly it. So times were good. They didn't want the red tape. They didn't want the hassle of regulation. They were growing fast. They were growing and didn't want to have to deal with the extra hassle that this was going to cause. Guess what? It turns out they were a systemically important institution, because we had to go bail them out to avoid a financial crisis.